Guys, I'm getting a seriously bad feeling about this weekend. You can literally smell the gunpowder in the air. It's making me so nervous. Just looking at yesterday's tape, it was absolutely spooky. Equity stomped, gold and silver puke, and the only crude oil caught a bit. The macro logic, the market is actively pricing in a US military ground invasion, but the market caught a slide that cat bounce right into the close. Why is that? Because Trump tweeted another 10-day delay on striking Iranian energy infrastructure. But does this showboating actually work anymore? I highly doubt it. The market has literal PTSD from Trump's lip service. Smart money isn't buying these verbal promises, especially with Iran vowing to fight to the bitter end. These headline whipsaw force institutional capital into the most cowardly but safest strategy, sitting in cash. Just look at March. Fund managers' cash allocations have spiked to 4.3%. And right now, gold, silver, and a broader tape are in an eerily perfect balance between bulls and bears. They're deadlocked in a tight range. Nobody wants to fire the first shot. Now let's talk about silver, because this is today's massive wildcard. Today is the final physical delivery day for silver futures. We're looking at roughly 50 million ounces silver this month. What does that mean? That is a staggering 6% of the entire global annual silver supply. Seeing this massive volume change hands in such a short window is a screaming macro signal. And what's even crazier, the settlement price for this delivery was backed at $72, and right at that level, JP Morgan scooped up a net 6.2 million ounces of physical silver. Guys, when a mega bank chooses to take physical delivery at a relatively high $72, what does that tell you? They are front running a massive future markup in physical silver. All three major exchanges are showing silver futures in deep backwardation. Spot is trading over for red months, a textbook sign of a severe physical shortage and a rapid demand. But hold your horses. Don't follow in yet. Institutions taking physical delivery aren't day trading. They don't care about short-term chop. However, the second these geopolitical tensions cool off, silver is primed for a massive leap. How high can it go? Looking at the EBC order flow tool, silver is currently printing a weak consolidation between 68 and 70. 70 is the ultimate bull and bear pivot. If a bounce fails to reclaim 70, the bears are still in total control. And the critical resistance sits around 72 to 73. That's just a massive short-term ceiling loaded with heavy sell walls. As for the US memory chip sector, like I mentioned in the last video, a technical breakdown is a fundamental breakdown. Market makers are engineering a shakeout to kill retail sentiment and reset multiples. The price action in these memory stocks is a perfect example of this. The tape right now is a masterclass in Trump-style market manipulation. On one hand, massing troops and rattling sabers to push fear to the absolute limit. And on the other hand, extending deadlines and dangling peace talks to keep the market a brief gasp of air. This fight and talk playbook is designed to cause maximum market confusion, leaving both bulls and bears completely blind. That's why the candles on gold, silver, and oil are violently whipsawing and hunting liquidity. It's a relentless retail slaughter. In this specific short-term chop, stop hallucinating about catching a massive directional trend. Hit and run. Book your profits. Capital preservation is the only thing that matters right now. As always, this is just my personal macro read, not financial advice.